Good day, everyone. Today, we have Mr. Pratik Oswal, who's currently the CEO of Glide Invest, an online investment platform. But he also heads Motilal Oswal Mutual Fund's passive funds business, the ETFs plus the index funds, where he oversees approximately $2 billion in assets. Before this, Pratik was heading operations and finance at a Series A fintech startup in San Francisco. That company was backed by prominent investors such as Y-Combinator, Khosla Ventures, Chicago Board of Exchange, and many others. Apart from fintech, Pratik has experience working in investment banking, PE, and hedge funds. He has studied math and economics at Emory University and has an MBA from London Business School. Pratik, welcome to the Fund Managers Show.
Thanks for having me, RC. Looking forward to a conversation today.
So, Pratik, a very interesting profile that I just read, the bio of yours. Tell me a little bit more about your interest in finance. How you decided fintech is something that you're going to focus on. Tell me a little bit about your background that others are not aware of.
Yeah, absolutely. So I think finance is a little bit in my blood. So I think it's something that has been of interest since very early ages. So when I was 11, in fact I think my first book in finance that I read about, I have read too many books in finance, so I'm trying to stay away from finance books now, is actually a book by this guy called John Burr Williams. So it's called The Theory of Investment Value, that really talks about people actually take the stock market for granted, but how are why is the price the way it is on the exchange or on the stock price? So I think the understanding of that was really helpful, and that was when I was, I would say, 12 or 13 years old. So I think I have been exposed to finance. I'm very grateful for it from a very sort of young a very young age. I bought my first stock when I was maybe 14, 15 years old. So I think in general, I think it's something that I'm obviously now 20 years after that, but I think the one thing that has been consistent in my life is my passion for finance. Even though academically I wasn't very good in school, I was always good at math. I was always good at understanding finance, reading about finance. So I think that has been consistent across my lifetime, and it's I think continued to grow as well. Even in my sort of personal life, in my professional life, I've been working in finance, well, formally for the last, I would say 13, 14 years across different segments. So first half of my 20s, I worked in more traditional finance, which is investment banking, private equity, hedge funds. But then the second half of my 20s, I was really when I went for my MBA to the UK. And honestly, most people don't talk about it, but actually the place in the world where actually the word fintech came about was actually the UK, because I think UK was where majority of if you look at payments as a category, I think 60% of the world's forex actually goes to UK in some form. So I think was exposed to fintech very early when I was in the UK, when I was doing my MBA, and then obviously pursued a couple of internships when I was studying, and then ended up in Silicon Valley, where I was working in a very good company. So I think in general, second half of my 20s, I worked in more sort of I think fintech, and then now I'm trying to add both of them at this point.
Very interesting, Pratik. In fact, this is the first time I'm hearing of somebody who was invested in a stock when he was 14 or 15. Do you remember which stock or what kind of stocks you bought at that point, and what was been your experience with them?
Yeah, I think it was. I mean, I think everybody remembers their first, or at least the most people I speak to remember their first, stock purchase. It was actually a PSU bank. It was a bank called Dena Bank, which is still there. I think I did some internship, and there was this report called below book banks, which is basically banks that are available at below price to book. And I mean, a lot of I think banks at that point were sort of valued there. So I took a call based on valuations, and in fact today they're valued even below what they were, I think back there in 2004, 2005. So I think the learning is that don't fall for value traps. You have value investing, but you could also fall for a value trap where you buy something cheap, but there's a reason to why it's cheap. So I think that was a big learning. Honestly, I haven't really bought any stock in India in the last, I would say maybe 10, 12 years. So I'm more of a mutual funds guy now.
Great. So that segues into the next question that I wanted to ask. So you are the head of passive investing, and passive investing is something that I personally have seen, a lot of talk about in India, especially in the last, couple of years, right? Before that, it was all about active investment. But if you look at the US, Vanguard started this whole trend. What are sort of the advantages, if to our audience who are listening? The information asymmetry in Indian market, do you believe it's still there versus a developed market like US? And what will be your 2 to 3 points for passive investing versus active investing?
Yeah. So, I think, so I obviously am a proponent of investing, whether it be active or passive. I think the problem in India is not many people invest. And the only really way in which you can create wealth is to be a proponent of ownership. I think if you look at any wealthy person on the planet, I would say almost all of them, 99.9% are wealthy, not because of their salaries, but because they own stuff, they own stocks, they own real estate, they own gold, they own some IP, their own, their own brand. So I think ownership is super important. It's the only way to really, become successful and wealthy, or at least wealthy. And I think the easiest way of ownership is, through equities, mutual funds, and within mutual funds, the easiest way is to, I think passive funds. There are thousands and thousands of options for you to choose from. Becoming an investor in India is I think anywhere in the world is quite complicated because of the number of options and all of you have. And obviously then you have an industry where, there is a lot of mis-selling happening. So I think passive funds is one such category where it makes things very simple. You don't have to worry about, which stock to buy, which stock to sell. You don't have to worry about which fund to buy. You buy an index fund and honestly, you'll do better than most people in terms of performance. So I think in India where, still you have a huge proportional population where you really don't know what what to invest in, what to buy, what to sell. Index funds, ETFs really make it super simple for people to buy it. I mean, you're saving costs. So unlike most other funds, index funds tend to be a lot cheaper. So I think more of your money is invested into the underlying stocks, which is what gives you good returns. Index funds also follow a benchmark, which we have a track record of 10, 15, 20 years. The S&P 500, for example, has a track record of over half a century. So you really know what you can expect from your investments. Much easier for you to plan goals. And lastly, also what we've seen in India, and this is similar to the West, where performance also is, well, I would say 10 years ago passive funds were not really comparable in terms of performance, but today we've seen that in terms of performance they're quite comparable. So I do believe that investors are getting a vehicle which is cheap, which they don't have to worry about thinking twice. It's effective in terms of returns, and also I think it's easy to understand and also participate. So I think overall that's what we believe. At least I believe passive funds has a huge opportunity to play. And it's not like this came from nowhere. I used to be a part of a company in San Francisco where we actually built a lot of solutions on top of passive funds. So that's where I was sort of introduced to passive funds. I was always I would say very sort of alpha, like a bottom-up stock picking guy, but then I realized that it's just such a simpler so way of getting more people to participate in your funds, which is what I came back. And honestly, life it's much easier to look backwards and sort of connect the dots, and that's what I was exposed to. And then I came back and I thought that no one's talking about passive funds, no one is thinking about them, and that's what sort of then I led to me sort of launching a whole host of passive funds in the last 3 years.
Excellent. I mean, I've been tracking, so especially the Nasdaq 100, most fund. That's it's been good. So a couple of points that normally skeptics of passive raise, right? One is tracking error, the other one is liquidity, and the third one is addition of companies into the index that you probably won't hold if you were to hold it directly, right? So the Nifty 50 was recently reconstituted, and a major company came in, and people are a little unhappy about. So can you address these three concerns about tracking error, liquidity concerns with regards to ETFs in India? I'm not talking about the broader market. And what can you do with indexes getting reconstituted to add new companies?
Yeah, no, those are actually great questions. So, in terms of tracking error, I think the only real concern here, at least in the three questions, is more towards not tracking error, sorry, towards liquidity. I think liquidity has been poor. I would say still quite poor, and the solution to that is index funds. So, so we are at least in MO, we're the largest number of index funds in India today across all mutual funds. So I think I do agree, liquidity is a big problem, and it will obviously, over time, as more and more people come into the market, it will make things better. But currently, yes, I do agree, ETFs are quite inefficient still in India, compared to the West. And I think a good solution to that is to use index funds. It's much simpler. Also in India, most people tend to invest, at least retail investors, tend to invest in in the West, it's called dollar cost averaging. Here it's called, systematic investment plan. I think that is one of the best ways of investing in equity markets. And I think index fund, again, it's a lot easier for people to, set up these systematic investment plans in India. The third is that, unlike the West, where, ETFs are generally more tax efficient. So it's actually a no-brainer to, if I was in the US, I would not look at index funds. I would only look at ETFs because they are a lot more tax efficient. In India, that's not the case. Both are exactly the same in terms of broad structure. So the return that you can expect on both is pretty much the same. So I think in that sense, yes, I do agree liquidity is a problem. And till that happens, investors should look at index funds. In terms of tracking error also, I think if you look at tracking error for Indian funds today, it's, I would say, comparable to what you see in other parts of the planet. I think that, yes, I do agree that it used to be really high, maybe 3-4 years ago. I think because also expense ratios were quite high, and and also a lot of mutual fund companies were not as like the category was not big enough for them to care about tracking error. But now, since the category has become a lot bigger, tracking error has become in focus, and you see that now Indian funds are extremely efficient. I would say in line with global standards, not only with tracking error but also in expenses. I mean, the expense ratio of most of the Indian funds, especially the popular ones, are in line with global standards. So I think even though the economics for the AMC is wildly different from what you see in the West, you're still seeing super I think low cost index fund ETFs. So I think a tracking error, yes, I don't see it much of an issue than what they used to be, say, 3 years ago. In terms of the third aspect, and that is the beauty of indexing, right? I mean, the whole idea about indexing is that who's an index fund owner does not have to care about what stock comes in, what stock goes out of the portfolio, because eventually whichever stock is coming in right now, if it does not perform, it's going to be thrown out sooner or later. And also the percentage of holding of these companies are relatively very small. So they don't really cause a lot of issues in your overall portfolio in terms of returns. What we've also seen is that when it comes to index funds, ETF, passive funds, the lower the stock price goes, the more insignificant the company becomes because its weightage keeps shrinking. So I think in that sense, the more the company sort of shrinks, the lesser and lesser importance it has in a portfolio, and vice versa. And lastly, the index is a very dynamic, it's, I would say the form of, the correct word would be Darwinism. I think index follows Darwinism, where, it follows survival of the fittest, in the sense that, if you look at the index in 2004, 2005 in India, you would see a lot of infrastructure companies, you'll see utilities, capital goods. Today, you'll see financial services, you'll see information technology and banks. Tomorrow, you might see something else. So, as India evolves, you don't have to worry about which sector will do well, which sector will do badly. You just have to hold the index, and the index will evolve over time basis on the best company going up and going down. I think the call that you need to make is, will India be a bigger company? A bigger country? And the answer to that is yes, a lot bigger. And the call you have to make is, will the top 50 companies in India be bigger 5 years from now than they are today? I think yes. I think regardless of what those top 50 companies are, we know that the top 50 companies or the top 500 companies, in Nifty 500 will be a lot bigger than they are today. I think that is a good case for why, ETFs, index funds, you don't have to worry about 1 or 2 stocks in a portfolio.
Excellent answers. Before jumping into Glide Invest and what you do there, sticking to the ETF within Motilal Oswal and the larger kind of new ETFs that I've seen come, so sort of tracking all sorts of different indexes. You have IT, you have FMCG. I think I recently saw MNC index, all that stuff. So any new ETFs planned with a global exposure in mind? I haven't seen anything other than the US focused funds in India. So if China is definitely going to be what Ray Dalio says, China is definitely going to be the next one. Do you have any China focused ETFs planned in the pipeline?
Yes. So yes, we do have. So the thing is that we grew at a very quick rate. So I think we have. I think the whole concept of international diversification is something which has been an outcome of a lot of effort done by my team that I'm working with. So that there was a time in 2020 during the pandemic where all of us, 15, 20 people of us, used to do 10 to 15 calls a day, on just talking about the importance of international diversification. And that sort of, blew up a lot in 2021. So I think a lot of effort that you do in this space, especially when doing anything innovative, requires, I think the results are always delayed and cumulative. And sometimes it might not be the case. So, I think in our case, obviously, when it comes to international funds, we have benefited because a lot of people, I think if you speak to a lot of people in India, they are thinking about international diversification. They are thinking about having part of their portfolio outside of India. So I think that is and that is something which makes sense, because if you look at any portfolio outside of India, everybody has some component of their money outside of India. So I think there is value in international diversification. Which and I think a lot of people have taken the right step of investing abroad and all of that. But I also agree with you. I think US is not the only country people should look at. I think US should be the first country because it is I would say it's the US market cap is 55-60% of global GDP market cap. So I think in that sense it makes sense to invest in the US. But if you look at other regions, we actually also have an IFA fund, so Europe and Far East, that we launched last year. We didn't put in much fanfare because we were expecting this the stopping of mutual funds, which has happened early this year. So I think we have that fund live, and that's a pretty good fund for people looking at developed markets, ex-US. And we also will be coming up with we already have approval on that, on an emerging market fund, which is a combination of, I think EM fund, which I think is also quite popular, which is a combination of China, Taiwan, Russia, Thailand. So I think if you combine IFA, EM, and S&P 500, you can essentially create a global portfolio just using our index funds. And I think that's something which hopefully we'll be able to launch soon. When I think the new limits have been announced, because currently most international funds are closed for new subscription in India.
Right.
So I think those are some of the funds that we can expect. We also have a China dedicated fund that we filed, but I'll be honest, till we don't get an approval, or till we don't see further limits being sort of introduced into the mutual fund ecosystem, that fund may not come till then. Yeah, but we do have a China focused fund in the pipeline.
Great. You mentioned an important point that I missed about RBI's regulation that basically
Yes.
Stopped you from taking new investing. So all the SIPs are stopped. So do you have any kind of visibility? Have an industry body from mutual funds gone to RBI, and have you guys discussed?
So the visibility was there, but the current macro situation is a little bit tough, especially in the forex. If you've seen the way rupee has moved in the last 6 months, it's not been great in terms of I think our forex reserves is also going down. So I do believe that once there's clarity on this war and the macro situation sort of calms down, then you can expect these funds to open up in new limits. But till then, I do believe that unfortunately, India needs to import most of its energy, and India is also I would say a lot of our imports are pegged to the US dollar. So I think it's a double whammy when obviously global energy prices have gone up and the dollar has appreciated. So I think till there's more clarity on the war, as well as on the inflation and as well as the forex, I think till then we will see it will take some time, but it has at least from what I I think understand it will happen soon, because I think the regulators do believe that this is a bit of a no-brainer in terms of I think investing abroad. It's more transparent, it's cheaper, it's better for the retail investor, and also when it comes to mutual fund investing, unlike LRS, where if you send out money, it's out, someone will come back. But when it comes to mutual funds, you have to sell your investments at some point. So,
Right.
and in that case, I guess, money will sort of come back, hopefully over time. So I think that's why we believe that this is slightly a better way of investing.
Great, excellent. So let's segue a little bit and talk about your startup, Glide Invest. So please enlighten us what's the objective behind it, and how excited are you about helping investors?
Yeah. So I think what we've seen is that in India there's a lot of new investors who have come in the last 3-4 years. So the influx of new investors, the number of new demat account holders has completely exploded in the last. I think there's 2.5-3 times more demat accounts in India than they were 2 or 3 years ago. So I think there's been an explosion of new investors coming in, and I would say most of these investors are first-time investors who don't know much about investing, who are still learning, and who need guidance. I think if you are a wealthy individual, say if you're investing, say 10 lakhs, 15 lakhs, 20 lakhs plus, or even 50 lakhs, then you can get access to an advisor who will tell you what to buy, what to sell. But if you are doing a 10,000, 20,000, 30,000 rupee transaction, then there's no market for advice or guidance. So the whole idea behind, I think why we started Glide is to provide that guidance to investors who are looking to, invest for their goals, or who are so looking to get access to expert built portfolios where they can just, invest in one click and they don't have to worry about their, at least their wealth creation. So that was the idea behind Glide Invest, is to, can we build, a platform that helps sort of newbies, non-sophisticated or non-DIY investors, to really help in their wealth creation process, which is where we came in. And, we obviously have a lot of investors today who are, building their long-term goals on the platform, who are investing in our portfolios, where they don't have to worry about what stock to buy or which fund to buy or what should your allocation be in multiple asset classes. So we provide all of that, in a relatively simple interface to an investor.
Great. So is it a robo advisory model, or do you have
Yes.
financial advisors who handhold each one?
So we have a combination. So it's started off as a robo advisory model, but we have added an element of financial advisory on it as well. So I think it's over time it's probably going to be a hybrid model where if investors are looking at further I think support, then they can get access to financial advisors through the app as well.
Great. If I were to ask you sort of crystal ball glazing into 5 years down the line, where do you see Glide Invest, and where do you see Indians affinity towards markets versus real estate and gold?
Yeah, I think India is a very broad term, to be honest. I think most of India, in its current form, may or may not even start investing in equity markets in their lifetime. I would say that the people do take advantage of this TAM, or total addressable market size, but actually it's severely skewed towards the cities, the metros, and towards I think the people who are working at jobs. But a lot of India is still in rural places, still in agriculture, and I think financialization of savings needs to happen before people start investing. So I think we will see that, and that's already happening in a very big way, where all of India's rural population is coming online. They're using UPI, they're having a bank account. So I think India is still in the stage where a majority of the population needs to I think have a bank account and sort of use that for their needs before they can look at, say, saving their money into whatever FDs or whatever it is. So I think hopefully we'll see a much larger amount of population that invest today. I think you have less than, at least the mutual fund industry is about still 6 to 7% of the population investing, and if you can get that to say 25-30% over the next 5 years, that's going to be an explosion of new investors coming in India who are investing, who create wealth, who are becoming wealthy. That is what at least I expect in the next maybe 5 to 7 years time, hopefully in the next 10 years for sure. And I think so I think one is obviously that a lot of new investors are coming in. You'll also see a lot of, I think offshore, funds or, people investing in India. That's going to happen. I think India is now become the default sort of, investment destination, for the world. It has been, but, people have always, have these preconceived notions about, investing in India. So, but I think that's changing. You still have, I would say, less than 1%, if people of outside of India who are investing in Indian assets, and that will hopefully go into 4 to 5%. So I think there's going to be a lot of activity, in terms of entrepreneurship, in terms of new investors coming, investing, and also offshore investors coming in. So I think it's going to be phenomenal. I think I am super bullish, and I'm super excited that we are in this zone, and also India in the world landscape has also changed a lot, in the sense that now with the fifth largest economy, most countries would take India very seriously, in terms of demand policy, all of that. So I think in the importance of the country has also gone up tremendously. So overall, I think I'm pretty excited. And obviously at Glide or at passive funds, we've barely scratched the surface. I think, we can easily go 10x, 20x from where we are just in the next, few years. And that is what we're building towards. I think for me, the biggest, I would say, focus point is education. That I've been spending most of my time doing that in the last 3 years, and that is something which hopefully I'll continue to do over the next 3-4 years. So for me, I think there's a lot of scope for that.
Excellent. No, you touched upon 2 points. Educating the investor, and the India that is limited to the major cities, right? The B30. Bharat, let's talk about Bharat, the villages, right? And education put together. What do you think are sort of even insurance penetration, if you see with all those ads, that touches your emotional aspect of dad and all that stuff. What sort of educational initiatives, according to you, can help Bharat move to larger financial inclusion so that they don't miss out on this growth?
Yeah, I think it's an excellent thing. I think globally, and this is a global thing, there's not a local thing. There is not really any financial education that, is delivered, in schools. I think the thing about finance is that, the trick to become successful investor is actually the easiest trick is to start early. So we all know the power of compounding. And, I think if you ask someone like Warren Buffett, who started investing at 11, I mean, his biggest regret is he didn't start earlier because if he started, say, 2 years earlier than that, he would be worth 3 or 4 times what he is today. Sure. So I think the power of compounding works in a very sort of non-linear way, something our brains cannot understand. And I think the easiest way to do is to, start investing at 18, 19, 20. And that happens when you, sort of, have this education. The problem with, I think, investing globally and also in India is that people have to self-learn. And when you have to self-learn, you start off with speculation, which inevitably ends up in you losing a lot of money, and then you learning, and then, in the mid-20s, 30s, mid-30s is when you start investing in those long-term sort of, index funds or, I think mutual funds. So I think, any sort of early education that happens in urban as well as rural, I think even in rural, if you have a system where you make financial education mandatory, and not only stocks or investments, but also insurance, FTs, whatever it is, I think that can really make a big difference because it can help people start early, which honestly can make a massive difference over the long term.
True. Excellent. So Pratik, off work, what sort of a person you are, and what sort of hobbies do you have? How do you chill? Tell us, all the inside information about how you relax and unwind.
I mean, to be honest, I would say, let me talk about things that are different. I mean, I enjoy traveling. I enjoy, I actually read a lot. So I end up doing at least a couple of hours of reading a day. And I think I would say one thing I'm proud about in my life, if I had to choose one thing, would be my habit of reading. Being a voracious reader. It again comes from, I think, my family, my father, who also reads a lot. And I think that is something which has really helped me in terms of building this, I think, judgment, or, I think at least learning a lot. It's helped me giving me a learning mindset. But in general, I think, I like reading a lot. I like learning And even in reading, I think I'm trying to do or read about stuff outside finance. So right now I'm on this thing where I want to learn all of world history in a few months time. So I'm on that track right now. But in general, I think reading is something I enjoy. I obviously enjoy traveling with my wife and my family and with my friends. So that's something which I obviously enjoy. I tend to go to offbeat locations. I tend to go where locals eat. I go to sort of non-touristy stuff mostly. In terms of, but also in addition, I'm also a big music fan. So I do end up attending one or two electric music festivals a year. I went to one 3 weeks ago. I also mix my own music, so I'm also learning how to mix musics. But in general, I think those are some of the things which helps me unwind, from work. I actually do enjoy working, so I don't really feel the need to unwind. I know it's a fun thing. I like coming to work. I'm lucky to work with some very smart people who I keep learning from. So in that sense, I think it's more about how do you spend your time outside of work, and I think these are some of the things which I do differently, I guess.
Excellent, excellent. So Pratik, if I were to ask you, the pre-pandemic Pratik and the post-pandemic Pratik, is there any major paradigm shift in your thinking, or you're still the same? Or any key takeaways?
Yeah, so a big shift actually. Big shift. I think when there is some sort of validation, of something that you spent a lot of hard work and sort of a lot of your heart and soul into it. It really helps elevate you as a person. It really helps. So I think so pre-pandemic, in terms of, so I think work-wise, I've at least understood the power of this about Zoom and about the digital world. I think when I used to go for these conferences, I used to talk to 40, 50, maybe 100, 150 people max. Today, through this medium, I can get access to millions of people. So I think the sort of scale that that online has is quite powerful, and that is something which I've managed to leverage it during the pandemic. So that is one. Second, also is work-wise. We scale up really quickly in my passive index funds business. We went from I would say less than I would say maybe $100 million to close to $2 billion. So almost 20x just in a year and a half, 2 years. So I think that has been a great journey, and that's really helped me and a lot of my teammates, all of us, to understand and learn as much as possible. So I think that has been a big contributor to some sort of confidence, and I think also that the knowledge that has come in. So I think that's again the big difference to what has happened in terms of pre and post. This third thing is that I and this is more of a personal thing. When you have a team of 4 or 5 people, which I did, and now I have a team of say 90, 100 people. Oh, there's a lot of shift that needs to happen in you personally in terms of managing people and being able to get the best out of them, and creating a good environment and culture and all of that. So I think even that has sort of been a great learning experience for me. As I've sort of had that transition over the last couple of years. So I think a lot of changes. PM post pandemic, and hopefully I'll see a lot more changes over the next couple of years.
Great, great. So what sort of has been your management style? Because you run a startup, at the same time you run Motilal Oswal is a run organization, and you take care of the passive thing. So I believe, correct me if I'm wrong, so the organizational style is different, the culture is different between both, or have you tried to kind of sort of bring in a sync with culture, running a startup as well as an organization?
Yeah, so you're right. The culture is different. I think the startup will have a people culture process of a startup, and we want to leverage on the credibility of a large company. Whereas the mutual fund business is more traditional. It's more sort of I think the big company sort of culture. So I think that mindset shift is still something which is I find hard to do, to be honest. Context switching is quite tough for me, and I do struggle with that, to be honest, on a day-to-day basis about trying to place these two. But in general, I honestly don't have a management style. I think it's too early for me to have a management style. I'm still evolving as a person. I think, whatever, it's different from what it was 2 years ago. And I hope it's a lot better. It's a lot more effective 2 years from now. So I think in my case, I honestly don't know what that means also. I'm still continuously learning and understanding and trying to be better. So I think it's sort of evolving, and hopefully I'll be able to answer this question in a couple of years.
Great. So you alluded, you are a reader, and this is something that I always ask all my guests, to recommend 3 books for my audience. Sure, you have a huge list, and you mentioned that you are, sort of into a rabbit hole history buff now. So recommend 3 books from 3 different facets that have fascinated you.
Yeah, I mean, it's a tough one, to be honest. I do think that, I think reading comes from not reading the books people recommend, but actually reading what you think you'll enjoy. I think, I read about psychology, philosophy, even spirituality. So I think lots of books. I think in terms of, if I had to, choose maybe a couple of books, I would say if you're reading finance, then read about Warren Buffett. I think he's probably the epitome of finance in terms of his understanding of what works and what doesn't work. Even at 95, 94 years old, all of his predictions, or not predictions, but at least his thoughts are completely right today. People are now, I think he was so I think that judgment comes if you follow his life, if you follow his work, if you read what he's written. So I think definitely if someone wants to get into financial services industry, read about him, read about all his shareholder letters. There's about 50, I think 1962, so 60 of them now. So I think that is something which is absolutely invaluable. I do recommend that in a very big way. And speaking the truth, very few people have read it actually. So
Yeah,
if you read it, you have an incredible edge over anyone who's in the industry for the last 15, 20 years. You will know a lot more. So just keep that in mind. If people are looking at also investing, then also read about psychology, because ultimately prices of stocks are determined by psychology in the short long run. So if you do any sort of stock picking or mutual fund, stocks are, I think the price of stocks, or price of mutual funds, or price of these really determined by psychology. It helps you understand the world better, but also helps you understand the stock market. And also helps you understand people, because people are driven by emotions, not by logic. So I think any good books that you can think of that, helps in psychology, I really recommend. So that is something which, in fact, some of the best investors in the world may not be good in finance, but they're excellent in psychology. They understand people like no one else does. Even as an entrepreneur, if you're trying to sell something to investors, or you're trying to build an app that helps acquire users, deploying strategies on the basis of psychology is a lot more effective than trying to sell on the basis of features. So I think psychology is probably the most important category, and it's understanding of people. So lots of good books by Nobel Prize guys in the space. Third, I would say it's very understand yourself, understand people, understand yourself, and understand, how at least finance works. So, any book where, it helps you understand yourself. So, I think that can really be helpful. I think self-knowledge is extremely important. I'm actually reading this book by this guy called J. Krishnamurti, who's I think a very cool philosopher. He's written a lot of stuff. He has some big fans. So, he could be a good, author that you could look at when it comes to, understanding yourself, and maybe imbibing a little bit of spirituality in your reading as well.
Excellent. You mentioned that, you're on a quest to understand the world history. So what are you currently reading in history?
Yeah. So basically, I have a problem. I can't read one book at a time. I lack focus. That's probably why I think read multiple books. I'm doing multiple projects. So I'm also actually within the mutual fund space. I'm also starting a quant shop, which is something in the works. So, so that is something also that I'm working on. But yeah, I think even books, I tend to read multiple books in history also. So I think there's a lot of, so in fact, one of the biggest, sources of, I would say, learning for me in history, I've been doing this Khan Academy course. Khan Academy is online. I think it's an NGO. It's probably one of the best things that happened on the internet, to be honest. So they have a excellent, probably the best, course I know in world history. And it's very sort of, I think it goes on the timeline of history. And anyone who wishes to understand history can look at it from that lens. So I think and that is something I spend maybe a few hours a week on. It's a lot of fun. But in terms of books also, I think there is I like it when history incorporates pictures. So I don't like reading history when it's just text. So there's this book where I'm reading where it talks about the 100 objects that define history, and it talks about one object and the historical sort of context around it. It's a good way of learning what happened in history.
Excellent, excellent. So Pratik, thanks a lot for taking the time out and catching up with me. You mentioned that you're within the mutual fund industry, you're working on some quant fund. So once that is officially launched, I'll probably have a follow-up call to understand what that is. Thanks for taking the time out and talking about your personal path and what you do at Motilal Oswal as well as with your startup, and giving us broad recommendations of what to read.
Yeah, thanks a lot, AlphaStreet and RC for having me, and hopefully we can do this again. Thanks.
Yes, sure. Thank you, Pratik. Thanks for your time today.